U.S. trapped global capital and crashed economies. The U.S. financial massacre of 2025 has begun. Tariffs are just a mere feint, while America's main battlefield is actually the exchange rate war. And the first shot in this exchange rate war has been fired directly at our Asia. Taiwan has become the first sacrifice. So who will be next? This time I truly hope I am just being overly anxious. I truly hope everything I see is fake. I truly hope I get proven wrong emphatically. Because if I am wrong and all of this can be resolved, then I'd rather be wrong. But reality tells me that Taiwan has fallen into a no-win situation with no way out. I believe that whether you're in business, investing, or just a regular person diligently go to work, you can feel this dead end. At this point, any solution might already be too late. If you want to salvage the situation now, there are only compromises left. What do I mean? Welcome, ladies and gentlemen, to financial fortune telling. From the moment the U.S. government chose Bessent as Treasury Secretary, I knew this day would come. I just didn't expect it to arrive so quickly and strongly. Some people may not know about Bessent's background. He was a student of Soros, who personally witnessed how Soros failed the Bank of England, how he turned the treasuries of many Asian countries into his personal ATM, and how he manipulated the stock market and exchange rates to cause the 1997 financial crisis. And Bent is the one who learned all those tricks. While the U.S. had so many talented people to choose from, the government intentionally selected someone from a group that specializes in shorting the market and even put him in charge of finance. What does that mean? You can see that in the past few years, the new Taiwan dollar exchange rate against the US dollar has always decreased, meaning it was depreciating. But recently, in just 2 short days, the new Taiwan dollar has appreciated again, recovering all the ground lost over the past 3 years, a strong increase of 10%. Some people are very happy, thinking that the appreciation of the new Taiwan dollar is a good thing. Previously, eating a steak in the US cost about $219. Now that the new Taiwan dollar has appreciated, it only costs about $199 based on the previous exchange rate, saving 10%. That means traveling, shopping, and eating abroad are all cheaper. Buying luxury goods even get a 10% discount that only Taiwanese people benefit from. So isn't that a good thing? But I have seen people online mocking these individuals, saying that yesterday was Japan, today is Taiwan. Let me put it simply, years ago, Japan earned a lot of money by exporting goods to the U.S. Afterwards, the U.S. forced Japan to sign the Plaza Accord, compelling the yen to appreciate sharply. This meant that previously, when the yen was depreciating, tourists visiting Japan to travel and shop found it very cheap. But when the yen appreciated, Japanese goods became expensive and could no longer be sold. If goods can't be sold, businesses have no revenue, businesses go bankrupt. A large number of people become unemployed. Unemployed people have no money, they don't consume, they don't invest, and the result is that the Japanese economy fell into stagnation for 30 years. When the economy declined, assets in Japan were sold cheaply, and U.S. capitalists took advantage of this situation to push up the dollar, return to Japan, and buy assets at rock-bottom prices. Currently, everyone knows that Taiwan relies heavily on exports, meaning it sells goods produced in Taiwan all over the world, with the U.S. being a large customer. More than 20% of Taiwan's products are exported to the U.S. So if the new Taiwan dollar appreciates, it is true that Taiwanese people can buy U.S. goods cheaper, but Americans, Taiwan's large customers, have to buy goods more expensively. Furthermore, the U.S. also imposes tariffs, making Taiwanese goods even harder to sell in the U.S. The consequence is a repeat of Japan's fate. Businesses go bankrupt, investors lose money, workers become unemployed. Some people will say that Taiwan can loosen monetary policy and lower interest rates to stimulate the economy. It is true that Japan did this in the past, even maintaining negative interest rates for a long time, making borrowing money almost interest-free. But even so, the Japanese economy stagnated for 30 years. Why? Because when you do business and no one buys your goods, you have no customers. So even if the bank comes and says this money has no interest, please borrow it, you wouldn't know what to use it for. The more you borrow, the more you lose. The root cause is that customers, i.e., the US, no longer buy Japanese goods, but have switched to buying goods from China, where they are cheaper. Therefore, if Taiwan continues to let the new Taiwan dollar appreciate, the result could be similar to Japan. On the other hand, if it wants to push the new Taiwan dollar down, it must sell large amounts of new Taiwan dollars in the market and buy dollars. That means the amount of new Taiwan dollars on the market will increase, leading to inflation. Prices in Taiwan will skyrocket, and the money in people's pockets will be silently siphoned away. At the same time, when Taiwan buys dollars, most of that dollar amount will again be used to buy U.S. government bonds. In other words, currently U.S. government bonds are in a state where they cannot be sold. So now they can find Taiwan to take on the load, becoming part of the bearers of the burden. Put simply, it is quietly taking money from the pockets of the Taiwanese people and then using that money to buy back U.S. bonds that no one is buying. Today it might just be Taiwan, but what about tomorrow? It could be South Korea, Vietnam, or Hong Kong. When each place, in order to keep their currency from appreciating, is forced to buy large amounts of U.S. dollars and U.S. bonds, hasn't the problem of no one lending money for the U.S. to spend been solved? Therefore, if you choose to let the exchange rate rise, the domestic economy will worsen. But if you choose to keep the exchange rate down, it is no different than handing over the people's money to the U.S. government. Hearing this, some people will think that this is the dead end I'm talking about. But actually, I want to say that this is not the real dead end, because you still have the right to choose. Just consider the price to pay for each option and choose the one that costs less. So why call it dead end? The real dead end is when you completely lose the right to choose. And unfortunately, that has already happened. So today, sharing this, my mood is quite heavy. I hope you understand. I know what I say might cause everyone a lot of worry, but if I don't say it, should I just stand idly by and watch my supporters walk into ruin? At this point, talking about prevention is probably too late. We can only save ourselves. If you don't want to become a sacrifice of this no-win situation, and even want to rise above your current social class, you can subscribe to my channel because in the future, I will continue to provide more information. If you're afraid that you will watch it and forget, wasting your time, then you can like this so it is saved in your playlist. You can come back and watch and follow at any time. The first issue is that in just 2 days, the new Taiwan dollar surged 10%, a level not seen since 1988. Why is that? Currently, many people believe the main reason is that life insurance companies in Taiwan have been selling off their US dollar assets and converting them back into new Taiwan dollars. Historically, Taiwan has had a habit of investing in dollar-denominated assets, totaling about 1,700 billion US dollars. Of that, about 1,000 billion US dollars was bought by private institutions. And of that 1,000 billion US dollars, about 700 billion US dollars is held by life insurance companies. This means that when Taiwanese people pay insurance premiums to these life insurance companies, they use that money to invest in US assets, such as US government bonds, US stocks, corporate bonds, and so on. But recently, the US stock market collapsed, and US bonds also continue to plummet, causing these life insurance companies to suffer heavy losses, even reaching stop-loss thresholds. They were forced to sell off U.S. assets to raise cash and then convert from U.S. dollars to new Taiwan dollars. If they didn't cut losses and allowed assets to continue depreciating, they wouldn't have enough money later to pay Taiwanese people. The result is that when all these companies simultaneously cut losses and sold dollars to buy new Taiwan dollars, it was as if the entire market was selling dollars and buying new Taiwan dollars. The new Taiwan dollar exchange rate was thus pushed sky high. This is the reason most people are talking about. Personally, I'm still a bit reserved. Everyone knows that if a currency increases or decreases by 2% in one day, it is considered a very large fluctuation. If it exceeds 5%, the exchange rate is said to be out of control. Central banks in most countries will not allow this to happen. Yet now, in just 2 days, the new Taiwan dollar has increased by 10%. As I said at the beginning, such a strong appreciation of the new Taiwan dollar is completely unfavorable for Taiwan's exports. The important thing is that during those 2 days of sharp increase, the total transaction value was only below $8 billion. This means that less than $8 billion was enough to make the new Taiwan dollar exchange rate increase by 10%. Think about it. I just mentioned that Taiwan currently holds about $1,700 billion in assets. The 10% appreciation of the new Taiwan dollar alone caused a loss of $170 billion on that asset amount. Life insurance companies in Taiwan still hold over $600 billion in assets. So similarly, with the 10% exchange rate increase, they lost over $60 billion. Their stock prices also fell, but the amount of money they recovered after converting back was only a little over $8 billion. In other words, they accepted losses on assets in order to recover capital from U.S. stocks and bonds, and then the exchange rate caused them to lose another $600 to $700 billion USD. Is it not as if they felt they hadn't lost enough, so they caused the exchange rate to rise to make themselves lose even more? If that is true, it is no different than Taiwanese people giving money to life insurance companies. These companies then take that money to the U.S. market and intentionally let the money be lost. To put it bluntly, isn't it intentionally giving the money of the Taiwanese people to U.S. capitalists? Furthermore, the Central Bank of Taiwan also did not intervene, just as the wise monk said they were tacitly allowing it to happen. So I cannot be convinced. I absolutely do not believe that. Actually, now it's not just the new Taiwan dollar appreciating, but most currencies worldwide are appreciating against the US dollar. It's just that other places are appreciating slowly, while the new Taiwan dollar appreciated suddenly and was the slowest to move. For example, the Japanese yen that we invested in last year has now increased by 15% against the dollar. The euro has also increased by 13% this year. What does this mean? Ladies and gentlemen, the exchange rate war has officially begun. In previous content, I have repeatedly mentioned that U.S. capitalists like Warren Buffett, Bill Gates, Mark Zuckerberg started selling off their stocks last year to accumulate large amounts of cash. Meanwhile, the U.S. stock market continued to rise because the whole world kept rushing in to buy. In other words, U.S. capitalists are holding cash, while global citizens are holding U.S. stocks. This year, the U.S. fired the first shot by imposing tariffs, causing prices in the U.S. to skyrocket and leading to a market collapse. Trump's family and team made countless amounts of money, while people worldwide holding U.S. assets suffered heavy losses. When they lost, everyone wanted to sell off, but then they realized they couldn't sell even if they wanted to. Why? Because the second shot, the exchange rate war, had begun. Think about it. Suppose you were Taiwanese, you invested in U.S. stocks and lost 40%, and now you want to sell your stocks and convert back to new Taiwan dollars. But the new Taiwan dollar has now appreciated by 10%, meaning when you convert back, you will lose another 10%, totaling 50%. If you're Japanese, you invested in U.S. bonds and lost money, and you want to convert dollars to yen, you will lose another 15%. In other words, global investors are heavily trapped. Because their currencies have appreciated, all the money previously invested in the US is now locked, unable to be withdrawn. When people want to convert money back to their local currency, the local currency exchange rate skyrockets, making the losses even larger and more tragic. As I said, just 8 billion US dollars is enough to push the new Taiwan dollar exchange rate up by 10%. This means that just 8 billion US dollars is enough to trap all the money Taiwanese people invested in US assets, unable to turn back, unable to withdraw. Even if you lost money investing in US stocks, you cannot sell because selling and converting back to new Taiwan dollars will result in even larger losses. Converting to yen or euro is even less possible because those currencies have also appreciated strongly. The third shot is what I mentioned in previous content, triggering a financial crisis. Once that happens, the ones who bear the consequences will be the whole world. At that time, everyone who invested in dollar-denominated assets will suffer even heavier losses. As more people sell off dollar-denominated assets and convert back to local currencies, the exchange rates of the new Taiwan dollar, yen, and euro will skyrocket even further. That means at that time, the ones paying on behalf of the US are those trapped currencies. And these trapped currencies will suffer even more tragic losses. At that point, US capitalists like Buffett can use the Japanese yen that was prepared in advance and has appreciated to exchange for depreciating dollars and scoop up all the US assets that the whole world is selling off at rock-bottom prices. Most importantly, the dollar could depreciate sharply at that time, causing the debt that the US borrowed from the world to shrink significantly. Actually, I am not a prophet. A prophet is someone with a crystal ball who can see that it will rain tomorrow. They feel it will rain tomorrow without a reason, just because they have supernatural abilities. As for me, I don't have a crystal ball, nor do I have supernatural abilities. I can only see dark clouds gathering and then infer from that it is likely to rain tomorrow. I can only look at signals, look at the signs left by capitalists when they change their investment direction, and based on that reality, conclude that they're unloading US stocks. And I'm simply following along to find a way out. I just see that capitalists are buying gold, Bitcoin, Japanese yen, and Hong Kong stocks, so I follow their lead to profit. When US stocks rose sharply before, the trading volume was very large. How large is very large? If the trading volume exceeded the average, it could be called large volume. During the downtrend phase, the trading volume almost every day exceeded the average. Even on the day of the crisis, the volume surged incredibly. But during the recent recovery, stocks did rise, but the trading volume never exceeded the average. This means that this recovery phase of the US stock market does not have large capital inflows from major investors. It is simply people who are trapped and not selling. Why are they selling? As mentioned above, because selling achieves nothing. Converting back to new Taiwan dollars results in an additional 10% loss. Therefore, selling pressure is very low, and buying pressure is not high either. But because buying pressure was slightly higher than selling pressure, this recovery occurred. But the big money of major investors has not yet stepped in to buy the dip. Then you will see people recently proclaiming everywhere that US stocks are surging again. If you listen to these words and invested your 33,160 US dollars, equivalent to 1 million new Taiwan dollars, in a dollars to invest in US stocks, but you haven't bought anything yet, the new Taiwan dollar has already appreciated by 10%. That means you have completely lost 3,316 US dollars, equivalent to 100,000 new Taiwan dollars, without doing anything. This is why I say Taiwan, or perhaps the whole world, is in a checkmate situation. For example, Taiwan holds 1,700 billion US dollars in dollar-denominated assets. If you convert this asset amount back to local currency, the exchange rate will appreciate even more sharply. You have no other choice but to let the money remain trapped in the US. And if the money is trapped in the US, just think, less than 8 billion US dollars could cause the new Taiwan dollar to appreciate by another 10%. So what if people pour in $80 billion or $800 billion? What if the exchange rate continues to rise? As mentioned at the beginning, coupled with the US imposing tariffs, Taiwan's exports will not be sellable. To maintain exchange rate stability, Taiwan must inject more money to buy US dollars and US assets. The money flows in and gets trapped there. Therefore, this small recovery of US stocks is not only related to Taiwan, but many other countries also have to buy dollars to maintain the stability of their currencies. After buying dollars, the money is deposited in US banks, and US banks then use your money to buy US stocks or other US assets. Is that not a checkmate situation? The money you poured in cannot be taken out now, and the more you pour in, the harder it is to withdraw. This is what Ben talked about. You can understand it as an exchange rate war or currency war, financial war. But this will surely cause more damage than a trade war, because just a very small amount of money can cause a negative spiral for a certain place, leading to local economic recession and the collapse of local assets. If the U.S. intentionally triggers a financial crisis, the ones who bear the consequences will be the whole world. Therefore, the most important thing is that if the currency where you live is currently appreciating, investing in US dollar assets is like taking a hit before the game even starts. You haven't even invested anything, but you've already lost due to the exchange rate. For ordinary people who don't know how to invest, even if you know for sure that the currency where you live will depreciate later or that the local economy will worsen, for example, in the previous crisis, if you invested in Taiwanese stocks, you would have lost even more heavily than in the US. Therefore, during this time, cash is king. That is the best option in the short term. If you bought US stocks and couldn't withdraw in time during the collapse, now your money is trapped in US stocks. The new Taiwan dollar has appreciated and you cannot convert back. Or if you're like me and mainly use US dollars, what should you do? Actually, there is no other way, only compromise. For example, late last year, I used a large amount of US dollars to buy gold, Bitcoin, converted to Japanese yen and Hong Kong dollars, and then bought Hong Kong stocks. Over the past period, the gold, Bitcoin, and Japanese yen I bought have almost doubled. This offsets the losses due to the depreciation of the US dollar. Simply put, although the US dollar is no longer worth as much as before, the amount of dollars I hold has increased, so there's no problem. For example, a friend of mine invested in Hong Kong stocks and made a 30% profit. If converted back to new Taiwan dollars, the profit is reduced by 10%. Vai phải làm sao? Nothing needs to be done. As long as our profit is greater than the loss caused by the exchange rate, it is still profitable. As an investor, if you are Japanese but the Japanese stock market has few opportunities, you will switch to other markets to invest. But the profits earned must be easy, follow the trend, and be worth risking the exchange rate for the investment. Even if I have no other choice and normally use US dollars primarily, I know clearly that the US dollar will depreciate. So what I can do is buy currencies or assets that will appreciate, not like people currently advocating that US stocks are surging and now is the time to buy. I am also very confused. Could there be something wrong with my eyes? What's called a surge? I hope everyone can judge for themselves and understand why I used a large amount of money to invest in US stocks early last year. Because at that time, it was truly a period of strong increase, a bull market, where you could make a profit even by buying blindfolded. US stocks at that time had sharp increases and slight decreases. They would increase by 10% and only decrease by 2%. That is what is called a strong increase, and that was when we entered the market. Currently, U.S. stocks have fallen sharply from their peak. What I see is just a recovery. After a collapse, recovery is normal. But I absolutely do not see the U.S. stock market surging strongly. Have the previous losses recovered? In terms of numbers, it seems to have increased again. When it fell 26%. When it rose 24%. Consider how much it fell before. Now it has only recovered halfway. That means if you lost $500,000, you are still down $250,000. Is that called a surge? It is true that you can make money during a recovery, but it is not the easiest time to make money. How do you know how much it will recover, or for how long? When it falls, will it fall even deeper? Most people get deeply trapped and suffer the heaviest losses when trying to buy the dip, betting on a recovery. Our method is to follow the trend. When the bull market is strong and it's easy to make money, that's when we enter. We want to make money easily and simply, not take high risks to make money. Simply put, a bull market has an 80% probability of making money. If you choose the right assets, even gold and Bitcoin can double. But if you enter the market during a recovery, the probability of making a profit is below 50%, and the profit is not high either. So why choose the hard way and not the easy way? Therefore, if you don't want to miss the opportunity to enter the market later, or want to sleep well without pressure while still making money long-term, what you need to do is prepare in advance. Synchronize your language with mine, understand my entire investment mindset and methods, and then apply them to yourself. Finally, if you find any details today that you don't fully understand, I recommend reviewing the content from the 2 or 3 previous weeks. I will just say a few words. My content has a close logical connection. If you don't review the previous material, some people will say that I am only speaking after the event have occurred. But in fact, many things were said beforehand. I cannot explain everything from the beginning each time. That would be very bothersome and would be very long. Recently, the situation has become even more chaotic, but due to time constraints, I can only stop here. I share free information on how to become rich, an entrepreneur, an investor, and achieve financial freedom. If you don't want to miss out, I still recommend that you subscribe to my channel and turn on notifications. Then, share this content freely with others. I sincerely wish all the brothers and sisters who have liked this to achieve financial freedom soon. As long as in what I said today, you find 1 or 2 useful sentences that help improve your life a little, then I am already satisfied.